Hey folks, this is Rainer here from Trading with Rainer. So welcome to my weekly analysis for the week of the 9th of June. Alright, so for the upcoming week I'll be covering only the Canadian pairs, alright? Because this week I personally feel that the CAD dollar is in play, and the upcoming week the Canadian dollars offers quite a number of opportunities for swing trading. So without further ado, let's look at some Canadian charts. So the first chart I'll be looking at is the Canadian yen, alright? So on the weekly chart, you can see that actually this pair, similar to all other yen pairs, is actually in a longer term uptrend, right? So you can see here, longer term uptrend. However, in recent weeks, you can see the last 3 weeks we have a corrective move, alright? And this week itself, we see a long spike down, testing the 94 and closing much higher after that. So possibly this could be because of the non-farm payrolls that came out on Friday, thus some news release could create some knee-jerk reaction. So what is my bias on this? My bias on this is actually still bullish. So let's look for some potential opportunities to get long on this pair. So looking at the daily chart, what we have is actually a beautiful textbook example to get long, alright? So because we know that we have a trend, alright? Number one is we have a trend. Sorry about that. We have a trend. Right, because we know we are in an uptrend. So the first thing is we have a trend. Okay. Second thing, what do we have here? This is previous resistance. Price broke out of it, came back down and tested support. Rally up highest, and now it came back down again and test as support at the 94 level. So we have support. And look at this particular candlestick pattern. What is this? I would classify this as a very strong bullish pin bar, right? So number 3, we have a pin bar. So with all these 3 factors lining up together, the trend, the support, and the pin bar at a round number, this classifies as a very high probability setup to get long in anticipation for price to head up higher. So how would I get long on this? Looking at this, I would look to get long on Monday with a buy limit order because I'm a cheapskate. So possibly if price doesn't get up too high, I'll place a buy limit order somewhere around slightly below the close on Friday, right? So but if price get down way too low, below the 94, I'll probably just give this trade a miss. Alright, so I'll look to place a buy limit order with my stops below the week low, which is here. So as for targets, I'll be looking to take profits at here, which I'll draw the fib tool from swing low to swing high, right? And I'll be quite aggressive with this because the yen weakness has been prevalent in the last few months. So I'll potentially look to take profit at the 162 level, which is here, alright? So yep, I'll look to get long at this around 94 level, and eventually take some profits at 162, or all my profits at 162 level, depending on how price action is going to react as it travels towards that level. Yep, and this is my take for the Canadian pair, for the CAD yen. So now looking at the next one will be the dollar Canadian. So it's a very interesting setup again. So you can see that we have resistance at the 42.50, and if you guys can recall, I actually took a shot sometime back a few days ago on the daily chart, right? So what's my reason being for it? So let me go through with you some of my thought process. We can both agree that this level here is actually a resistance level, alright? Based on the weekly chart, you can see that, you know, resistance, and now we're here again, resistance, right? Tested the third time. And looking down at the daily chart, right, most people will find that this price action very confusing, because as you can see here, we have a bullish candlestick followed by a piercing pattern, and then price rally up higher, taking out the stops down here, and form another piercing pattern, head down lower, and again form another bullish pattern, you know, confusing the heck of everybody's mind. You know, is thinking, what is this pair doing? It's just ranging, taking out stops, and after that falling back down and rallying back up again. So price action appears very messy down here, and the trigger for me was actually this bearish engulfing pattern. Why is that? So looking down at the forward chart, we can actually see a potential head and shoulder forming. Actually, it has already formed, right? This is the left head, sorry, this is the left shoulder, the head, and this is a complex right shoulder formation, and this will be the neckline. Alright, so basically I went short around here, a sell limit here. When price broke down the neckline, I placed a sell limit order here with my stops above the head. So as you can see, that price has already rolled over lower. Alright, so where would I be looking to take some profits? To be frank, I do look at fundamentals like the CFTC report, and it shows that the commercial are heavy net sellers of dollar right now and heavy net buyers of the Canadian dollar. So this means that the dollar Canadian is ripe for a short. So I'll be more aggressive with my targets given the fundamental backing at the back of my head. So for targets, I'll be looking to take some off at the 100,500 or even down here, the 98.33, depending on price action and how price react to these levels. If price just simply blasts through this level, I'll look to take profit at 98.33. If not, this level, I'll watch how price behave before determining my exit. So yep, this is actually my thought process on why I went short on the dollar Canadian. Alright. And lastly, for those of you who did not went short on the dollar Canadian, the euro Canadian is actually offering some potential setup as well. Looking at the weekly chart, we have seen that the 136 level is actually a level of resistance, right? 136 level. So looking at the daily chart, what do we have here? We have actually a very textbook style bearish engulfing pattern here. It carries a lot of meaning because if you look at price over the last few days, it has been trying to rally up higher, but however, the bull seems tired. As you can see, the candlesticks are actually getting smaller, and the last bearish engulfing pattern actually engulfed the last 2 days and almost the third day price. So it shows that there's a lot of momentum in this bearish engulfing pattern. So for those of you who are thinking of short this pair, I recommend placing your stops above this high here. And for potential targets, you can actually look to go as low as this swing low here, or even the 130 level. So it's a potential 600 pips fall. So yep, another Canadian pair would be this. So I hope you guys enjoyed my analysis this week, and remember, you'll never trade alone when you're trading with Rainer.